Good morning. It's March 25th. This is the second week back from spring break. It's our second week of being completely online at Marquette University. This is an update for FinTech topics, which is Finance 4931. I'll also give you a quick update on coronavirus and how it's impacting the FinTechs. As you well know, when you signed up for this course, most of it is online, the lectures, the quizzes, etc. And we've been able to move the rest of it to an online format for the rest of the semester. So I hope you're coping. I hope you're able to find the lectures and quizzes. You should know what dates your FinTech news and unicorns are due and should be posting those. I hope all of you are going out there and looking at these. These are very good reports that are done, and I think they're very valuable and will continue to add to your knowledge. There is a paper due. You should go online and make certain that you're aware of what the requirements are. And quite frankly, we will have several Microsoft Teams meetings over the course of the next several weeks so I can answer questions about projects, bring you up to speed, and talk about the final exam. Also note that the quizzes are going to be 50 minutes long. And that's just because some people would keep these open for days at a time, and that's not appropriate for a quiz. So just be forewarned that your quizzes are going to be 50 minutes long. Your final exam will be 2 hours. So again, I hope everything's clear. Please email me if you have any questions. All right, so let's do a quick update of coronavirus. You certainly know what's going around the world in the U.S. The numbers continue to expand. We're probably in this for another month or two before we start seeing numbers subside and it's okay to go outside again. The impact has been rather dramatic, as you can imagine, on retailers, the entertainment industry, the tourist industry, the travel industry have been hurt particularly hard. Most businesses are closed except for those essential services. Stock markets have been off more than 30%, and we're likely to see an enormous increase in unemployment. Again, we're hopeful that this is only going to last a couple of months and that we'll be back in session at Marquette by fall. About a month ago, we should have seen it coming. HSBC decided to lay off 25 to 35,000 employees. A lot of it was caused by the outbreak of coronavirus in Asia. And it's not surprising, therefore, that it found its way to the U.S. and we're starting to see equivalent impact on jobs, particularly in the financial sector. You know, we're going on about 3 weeks now where events started being canceled in the U.S. South by Southwest, the NBA season, Major League Baseball, soccer, etc. And we started seeing the postponement of other events. And finally, the Olympics themselves were actually canceled just recently. So that was only 3 weeks ago. Seems like 3 months ago. Just over a week ago, we started seeing signs already that FinTechs were hurting. Visa and MasterCard reported fairly dramatic decreases in the level of volume that was taking place. So the financial impact was starting to be felt early. As you know, the Thursday during spring break, Marquette and other universities suspended classes, and now they're suspended or canceled in person for the remainder of the semester, and we've all gone online. Brick and mortar retailers are being hurt especially hard, including those that do not have much in the way of carryout. This is hurting a variety of FinTechs that cater to bricks and mortar retailers. The level of volume of transactions that they get paid off of is down substantially. On a brighter note for FinTechs was the World Health Organization's recommendation that people go to contactless payments and avoid using cash and avoiding person-to-person transactions. That was a real boon for the payment firms that operate in the FinTech space. Again, as the data came in over the last week, we're recording enormous drops in employment and visits to brick and mortar retailers. The contactless payment system is likely to get a boost. I think people's behaviors in terms of consumption are likely to change long term as a result of this. It was just a couple of days ago I got bold. I looked at the 5G companies. I looked at some of the FinTechs, saw what was happening to their stock prices, thought it was an overreaction, and began to indicate that it might be an attractive point to come into some of these acquisitions of some of these FinTech stocks that I think were well undervalued. One of our FinTech News of the Day report that was just a couple of days ago was that Square acquired a bank in Utah, and now they are a chartered bank able to operate in the U.S. That was a major event that we would have been talking about, but it got lost with all of the other news surrounding the COVID-19 epidemic. Another news of the day story that I thought was significant was M-Pesa, the large African digital retail service provider, contactless payment company, waived its fees with several billion people using M-Pesa. This was a major move, and I think it'll continue to push people into using contactless payment faster than would have been the case without the coronavirus outbreak. We've talked this semester about artificial intelligence and the use of chatbots. Here's an example. Microsoft, working with the Center for Disease Control, created a chatbot that allows you to go out and respond to various questions with answers that will guide you through whether or not you likely have coronavirus or not and need to seek professional medical care. Great example of a very efficient use of artificial intelligence and chatbots to accomplish things that could not be done person to person. This article came out less than a week ago. It's from the American Bankers Association, and they're nervous. Branch banks around the country are shut down, and more of us are using online payments and online banking. FinTech's got a real boost from the coronavirus outbreak, and I think some of these branch banks will probably not reopen. Finally, as you can tell here, there are winners and losers. The winners are likely to be the digital banks, and hence the losers are your traditional brick and mortar retail banks. Contactless payment providers are going to do well. Those that cater to brick and mortar retail establishments, especially travel and entertainment and tourist related, are going to do very, very poorly. Those fintechs that supply technology to the e-commerce industry are going to be receiving a real boost from this as we move more and more and more onto an e-commerce platform. And blockchain technology firms are going to continue to do well as we migrate. Some of the other losers, besides the obvious ones like traditional banks and traditional retailers, are going to be the real estate fintechs who rely very heavily on listings, showings, and mortgage closings. It may be some time before we're back to real estate showings. Could be 3 or 4 months before the real estate market picks up. Well, that's it. Hope you're all doing well. That's a very quick update on the course and how fintechs are sort of surviving through this particular epidemic. Good luck with the rest of your classes. We'll continue to meet online several times. Have a good day. Bye.